Hello, I hope this finds you well and enjoying your summer so far. Today is Friday, June 29th, 2018, and in about 3 minutes, I will share with you my thoughts on the current trade tensions. It's not news to anyone that the trade tensions have been at least partly responsible for the increased market volatility this year, but last week, investors' angst increased as the Trump administration announced tariffs on an additional $200 billion in Chinese goods sooner than many expected. When reviewing the current trade negotiations with China, I think it's important to keep in mind what has actually already been put into place and what can still be negotiated. To date, we have seen key tariffs put into place only on washing machines, solar panels, steel, and aluminum. The next stage of tariffs goes into effect on July 6th. And while there still may be more, we typically see about a 60-day period from announcement to imposition of the tariffs to give businesses as well as trade authorities the time to react, which also leaves further time for negotiation. Our base case is that there is an eventual compromise with China and that the U.S. economy and earnings growth trajectory continues. Here are a few reasons we believe this. Number one, no one wins a trade war. Both countries care about their own self-interest, and shutting off trade would do significant damage to both countries. Number two, fiscal stimulus. The amount of fiscal stimulus going into the U.S. economy in the form of tax cuts and deficit spending is far greater than the value of the already announced tariffs. Number three, art of the deal. President Trump has a track record of starting a negotiation from an extreme position and then moving towards compromise. And number four, midterm elections. They're coming up and Republicans do not want to do anything to damage their re-election chances. So here's what we think you should do. Stay calm and keep perspective. As always, please do not let your emotions get the best of you when it comes to making an investment decision. Look for opportunities. Market volatility can create attractive investment opportunities. Volatility is normal. Remember that stocks on average experience a mid-teen sell-off from peak to trough each year, and so far this year we've seen only about 2/3 of that. Stick to your plan. It's always best to have a plan before you need it so that when market volatility comes into play, it doesn't knock you off track. I hope this has put the trade tensions into perspective. As always, thank you for taking the time to watch this, and if you have any questions, please feel free to reach out.